Thanks very much, Meatloaf. That's a song "Rat Out of Hell." And morning to you, music lovers. Welcome to today's webinar on VAT on property. Always an interesting topic. A few gems for you on this. Okay. Today we've got myself. That's Paul Davison from PD Tax Consultants Director, and we've also got Laura Hayes, one of our excellent tax consultants, who's going to be helping out. Let's have a little bit about PD Tax. Our vision is to enrich lives by making tax simple as much as we can. And basically our mission is to deliver good tax advice at a reasonable price, etc., etc. So what do? Well, obviously we provide tax advice to individuals, businesses, etc. We do a tax partner service for accountancy firms, very popular. We provide some tax return forms, not that many, more sort of specialised ones. We do share valuations of private limited companies for the purposes of tax or for other purposes such as disputes or court cases, divorce, etc. And we do the odd tax investigation and prepare voluntary disclosures for people who've not quite got it right in the first place. So, housekeeping. Well, it's 9:31 and we're going to try and finish at 10 o'clock on the dot. As ever, your mics are going to be disabled throughout, so you can't talk, and I can't see you either. But what you can do to interact is that you can submit your questions via the questions and answer box, and Laura Brennan, who's also on this call, will ask us those at the end of the quiz, at the end of the seminar, sorry. There's also a poll which we'll be asking you halfway through. If your question isn't answered, don't worry, we'll get back to you following the discussion to discuss the question, although we have introduced now a breakout session at the end of the meeting, which you can join if you decide just to stay on, and we'll enable your mics and your cameras. And as ever, the general disclaimer is the presentation is for general information and knowledge, and it's not intended to constitute advice. If you have a situation, it's recommended that you seek competent professional advice before taking action. Okay, so onto the first part of the technical section, and we're going to have Laura Hayes, who's going to be talking about the option to tax. Laura.
Thank you. Good morning, everyone. Yes, as Paul has just said, the first thing that we're going to be talking about is the option to tax. So the default position is that a supply of land and buildings is exempt from VAT. However, there are some exceptions. So these include new freehold commercial property, so that's property that is less than 3 years old, which will always be a standard rated supply, and then also new residential property, which is generally a 0 rated supply. However, if you have a supply of a commercial building, which would normally be an exempt supply, you can opt to tax the building. And the effect of that will be that all future supplies that are made in relation to that building will be turned into a standard rated taxable supply. So any related input tax can be recovered in full. So HMRC should be notified within 30 days of the decision to tax, but it is possible to make a belated option to tax, and where the decision was actually made, but HMRC were notified, and we are going to look at this further on later on when in our case study section. So we're now going to consider why you might want to opt to tax a building, taking the example of a company that purchases an office and pays VAT on the purchase. So if the company rents out the building, then renting is an exempt supply. So under the normal principles, if no option to tax is made, and then the company can't reclaim the input VAT on the purchase of the office or any expenses related to the rental supply. However, if they do opt to tax the building, then the supply of the building, so the renting, would become a standard rated supply, and the input VAT on the original purchase could be reclaimed, and also the input VAT on any expenses related to the supply could also be reclaimed. But it's important to note in that circumstance that the company would have to charge VAT on the rent, so that would be something to consider if the tenant only makes non-taxable supplies. So now we're going to look at a case study where we successfully made a belated notification of option to tax for one of our clients. And so the client purchased a property and at the date of purchase it was derelict, and they had the intention of developing it and then leasing it out. And they paid VAT on the purchase of the property. They then reclaimed that VAT through their VAT return, but they didn't submit a notification to opt to tax the property at that time. They then transferred the property to their holding company and charged VAT on the transfer. And then the holding company then went to try and reclaim the input VAT through its own VAT return, and HMRC rejected the claim on the basis that it was an exempt supply. And this also raised the issue of whether the initial input VAT reclaimed on the initial purchase would be clawed back by HMRC. And so over a year after the initial purchase of the property by our client, we made a belated notification of option to tax. And with that, we provided evidence demonstrating that a decision to option to tax had been made earlier. So HMRC accepted that the date of the transfer to the holding company was the date that the option to tax was valid from, which meant that the holding company could reclaim the input VAT. Here it was important to note that our client hadn't actually let out the property prior to that date, and they hadn't made any other transfers where that had been where they charged VAT, because potentially the date could have been earlier, where from the date that the option to tax was valid could potentially have been earlier if they had done those things earlier. And they also, HMRC also did not question the input VAT reclaim on the initial purchase. So that obviously meant they could claim all of that back, which was a large saving. So now we're going to look at today's poll. So the question is, which property VAT issues are the trickiest? So if you could give us your opinion on that would be brilliant. So the options are A, all of the below, B, option to tax, C, understanding why and how to apply the 5% rate, D, DIY house building, and E, the capital goods scheme. So if you could just answer that on the poll, which is going to appear in a second, that'd be brilliant. Okay, so thank you very much for your answers in that poll today. So I think 50% of the people attending believe that all of the below topics, so all of those topics are the most trickiest issues in relation to that. And it certainly is a very complicated topic. So yeah, we definitely agree with you, but it's really good now because we've got Paul who's going to talk us through some more of those issues. So hopefully we'll find them a lot easier after that.
Thanks, Laura. Hopefully you might find them a little bit easier. But as we know, that is a tricky subject. So, Laura there talked about the supply of land and property and the actual supply of it, how you charge VAT on it, and how you claim VAT back in relation to the supply of the land. where this is a subtle difference. Now we're talking about construction costs. So somebody charging somebody else for doing construction work is the key here. So we're not talking about a landlord, we're talking about, well, we will talk about a landlord at some point, but initially we're saying, if you're doing construction work, how do you charge for it? Well, the prime principle is that construction work is charged at a standard rate, 20%, as are building materials, which are bought separately. For construction work, a contractor, primarily the principal is charged 20%. However, that construction contractor may be able to zero rate their supplies, if they are involved in constructing a qualifying building. Now, qualifying building is either something which is designed as a dwelling, i.e. a house, something that will be used for a relevant residential purpose, some sort of nursing home, etc., or something that will be used for a relevant charitable purpose. So, a contractor, so quite commonly here, we're going to come across a contractor who's building a house or building flats or building a tower block, etc., for a landlord. If that contractor's building one of those items, they don't have to charge VAT on their construction costs. Although some of the items within that construction cost could be standard rated, such as architects, carpets, etc. I'm sure you will come across those types of elements of construction, which is actually always standard, and you won't get the zero rated treatment. But yeah, so if you're building something which is a house, you don't have to charge VAT. But if you're a house building business, that's slightly different, because what you are doing as a house building business, you are yourself building the house. So you've got people who are working for you who are building that house. And then you're going to sell that house. So you're not working for somebody else, you're trading as a house builder. You're the person who's going to be responsible for building them, and you're going to be selling them. So on the face of it, the house builder will have to pay VAT on acquiring and building mats, etc., from the builders, merchants, or whatever. However, a house building business can claim that VAT back, because their intention for those houses is to sell them. So you've got intention there to have a supply, and as the next point says, selling a new house is a taxable, i.e. zero rated supply. So input VAT can be recouped. So what we've got there is you've got a zero rated supply, which means that the house builder doesn't actually physically charge any pounds VAT to the buyer of the house, but it is a taxable supply, so they have the right to reclaim the VAT they've paid in relation to those houses. But if they held on to their property as an investment, so say they build a house and for whatever reason it doesn't sell, and then they start to rent out that property, then as you can see, there's no supply of that property. It stays where it is, and there's no supply. So HMRC there could say, well, actually, even though there might have been an intention to supply when you built them, that intention is now stopped. So we want the VAT back on any building materials, etc., that you've claimed through the process without some planning, which you can do. I might as well talk about planning now. We're talking about it. So the planning will tend to be around whether you can create some sort of sale of the property. It's called the first grant of a major interest property, either a sale or a lease of the property, and tends to work well there. Typically, you might have a company or a group which is doing this house building, and what we can do, if it's within a group, we can maybe move it to another company within the group to try to get that back. Obviously, we've got to think about the other issues there. Okay. So construction costs 5%. Yeah. So if we're not building a brand new, because what we said was, let's go back to that. Oh, sorry. No, I won't do that. If we're building a brand new house or flat, you know, it's zero rated. But if we're converting something existing into a single, so we're converting an office into a single dwelling, or we're converting a big house into a number of dwellings, or we're converting a property into converting a big house into a bed sit, or we're converting a factory, a mill into a flats, or we've got the intention to create something which is for like a nursing home, etc. Then we can actually, the person who's actually building that, doing the construction work for that landlord, can charge their time at 5%, charge for their work at 5%, not 0, but at 5%, which is great. So we know there that the landlord, on the face of it, has a lower cost of 5% because it's residential, and on the face of it, a landlord can't claim back VAT. A residential landlord. So we know that the VAT rate's gone down from 20 to 5. So we reduce, on the face of it, we're reducing the cost to the landlord. Care is needed though, because not everything, as I said before, we can't charge everything at 5%. We can charge most things at 5%, but things like scaffolding, putting up and taking down, installation of carpets, the person who's doing that construction work has to charge that at 20% to the landlord. But costs can be apportioned on a just a reasonable basis. Difficulties in applying the 5% rate. Well, I think you probably all, if you've been doing this for your clients, you'll probably know that actually it's not so straightforward to work out actually how this works in practice. Because really it's difficult, because the responsibility of the 5% rate rests with the contractor. It's their job to decide what is at 5% and what's not at 5%. But on the face of it, they don't get the benefit. The landlord gets the benefit. So why would they bother to even think about charging 5%? There's no sort of clearance for this. There's nothing you can say to HMRC to get it right. So, and if obviously if the contractor charges at 5%, and HMRC say it's 20% down the line, is the contractor going to be out of pocket? So this is something that really needs to be discussed right from the start. It needs to be discussed between the landlord and the contractor. The contractor might want some assurances from the landlord that if HMRC do say to them that some items should have been at 20%, that that money can be recouped from the landlord down the line. It's also important to know that actually the landlord can't, if the landlord is incorrectly charged at 20% for items that should have been charged at 5%, the landlord actually can't claim that back because it's been incorrectly charged. So it really is in the landlord's benefit, or it's something that they need to sort out properly, or they could be exposed on that. If I did actually touch on this before, I sort of covered this slide up prior. But one thing we did do recently with this type of thing, whereby we had a client which was converting a sort of a shop into flats. We worked out that the landlord, the construction company, could charge them at 5% to reduce their cost because they're a residential landlord. But then we also worked out that actually what we could do is within that group, we could transfer an interest in that block of flats to another company in the group, which meant that we could claim that VAT back, 5% VAT back. Obviously, we've reduced the cost significantly already, but I think the 5% VAT cost was still going to come to something like £80,000. So we worked out we could transfer that to another group company. We could claim all the VAT back and still avoid SDLT and probably corporation tax on moving that across. Finally, in terms of this technical session, before we go to questions, DIY house building, this applies where somebody, an individual, not a business, is building their own home and they don't have a main contractor. So somebody who might be in the building trade who knows how to build a house, they might decide to build themselves a house. And they go themselves to the builders merchants and they buy items for the house and they pay VAT on those. So what you can do is that person can apply for a VAT refund from HMRC if they are A, building a new home, B, converting a property into their home, building a non-profitable communal residence, a hospice, or property for charity. But the new home must be separate and self-contained. It could be for the person to live in or for a holiday home, but it can't be for business purposes. It can't be but you could just use one room as a work from home office. It's important to note that you can only make one claim for a DIY sales world. That could give you a cash flow issue because what we're doing there is we're having to incur all that VAT where we're going along building this house. So it might take months, even years, if it's a labour of love to build the house. But you can only claim that back once it's finished. So it's going to be a cash flow issue which you need to factor in. And they're very strict on this. That claim needs to be in to HMRC within 3 months of the building's completion. When the building is complete is a potential topic in its own right, but it's obviously it's a little bit subjective when the building is complete, but it's something to bear in mind. And to make that claim, you need to submit all the original invoices, plans, etc., with the claim in order to get your VAT back. Okay, so that's the end of the technical session. Bear in mind that every client has different circumstances, and one size doesn't fit all. And call us if you've got any client situations that require attention. Now, I think we're on to the next seminar is the 15th of October. It's about that beautiful subject demergers, which I know is quite popular at the moment. So probably worth tuning in to talk about what you can do with demergers and when they're useful. Laura, any questions? Laura B.
Hi, well, yeah. We've got the first one is if a developer built residential properties for sale and reclaimed the input VAT, and on completion they were unable to sell them, what would be the tax implications if they were then let out as rental properties? Right,
yeah. Good question. That must have been asked before I started my section on that on that particular piece of planning. But obviously, yeah, if they built them and let them out, then we don't have the first grant of a major interest is the key. If it sits in the same company as an investment, we don't have the first grant of a major interest. So in effect, that business is now exposed because the intention has changed, and HMRC could say, or they should actually probably declare themselves that the VAT they've incurred needs to be repaid. Now, the VAT they've incurred might not be significant because it depends on what they've done. If they've used a contractor to build it, then the VAT they've incurred might not be significant. It depends on how they've done it. As they've done it themselves, there'll be a lot of that to claim back. So they've bought all those items. Whereas if they used a major contract to do most of the work, it might not be that significant. So it really depends on the situation, and each case is different to work out what amount of VAT at stake. If we've got tens of thousands of pounds at stake, then it's definitely worth trying to move it to a different entity or a different company to try to claim that VAT back. Well, then again, as I said before, there could be stamp duty on moving it. It could be corporation tax on transfer to and from stock. So, yeah, it's an interesting subject that just needs care and attention based on the circumstances. Any other questions?
The second question was, if they hold the property as an investment, is the rent exempt or is VAT charged?
Oof. Good question. So the company, yeah, so we've got did you say a house? Did you say a house, didn't you?
If they hold the property as an investment.
So it doesn't stipulate as a house or commercial? Presume it's
she said a house.
A house, right? If it's a house, then VAT is not chargeable. Even though say it was in a house building company, and that company is tax VAT registered because it's building houses, so it has to be tax registered. Even if it holds on to those properties and rents them, by definition, it's an exempt supply. So even though it's within a VAT registered vehicle, that part of that business is exempt because it can't. It's never going to be a VAT registered operation because it's residential property, so to speak. So VAT is not going to be charged on it to the tenants.
Yeah, and we've just got one more question.
Okay.
If a building company buys a residential property to renovate and sell on, are the renovation costs on the renovation costs, can the VAT be reclaimed?
I'll just say that again, sorry.
If a building company buys a residential property to renovate and sell on, he's assuming that the renovation costs, on the renovation costs, the VAT cannot be reclaimed.
That's right. So I'll just recap that. So a building company buys a house to renovate, and then the person who's said they can't claim those VAT costs back, right?
Yeah, that's right.
Yeah, I think that's correct because the supply of residential property is never going to be zero. Well, only the first supply of a major interest is zero rated. Any other supply is not. So that's why the 5% application is important for people who are converting because they generally can't claim that back. But what we did with the one we had in recent was it was a new because we converted it into a new property. We were able to then create the first supply. Whereas if you've got an existing house that you're renovating, that's an existing residential property. So the supply of it is never going to be zero rated. It can't be, which means you can't claim the VAT back. If you had a house, you converted it into 2 flats, then you might be able to collect. You might be able to get the 5% rate on paying the contractor, but you're never going to be able to claim that 5% back. Just proves how difficult it is.
There's just one more question as well.
You've got 2 minutes.
Yeah, so if they were installing a borehole for water supply and there was none there at present, would this item be chargeable to them at 0 rated?
Right. So this is to do with is there any description about whether and in what circumstances it's been put in?
No. We could get in touch about that question.
Yeah, I think we need to, because I just need a bit more information about that, just to understand the overall circumstances. Yeah, but okay, thanks very much. It's 10 o'clock, so I hope you've learned something today. You probably learned that tax is complicated. VAT especially is complicated. And if you want to stay on the line to talk about the anything else about VAT in more detail, please do so. If you don't, then have a nice day and a great weekend. And we'll let people talk to us in about 2 minutes. So if you stay on the line, you want to talk to us, we'll enable your mic in 2 minutes. Okay, thanks. Right, so we've got a few people left on, so I'll enable people's mics. How do I enable people's mics, Laura? Laura B. It's simple.
Click onto participants,
Yeah,
and then attendees.
yeah,
You should be able to do it from there.
yeah. Allowed to talk, allowed to talk, allowed to talk, allowed to talk.
And then if anyone would like to talk, just unmute your mic on your computer.
Yeah, that's it, yeah.
Hi, Paul. I've got a question. Steve Osborne. Can anyone hear?
Hi, Steve, you all right?
Yeah, good. Thank you. How are you?
Nice to hear from you.
Right, my question, I just literally typed it in at the last minute, but was obviously too late. I've got a resi property that I've had for years. It needs a new car garage because the existing one is on the verge of falling down. So it's in rental property terms, it's a fairly significant cost. What's the VAT situation on that?
Pretty sure you're stuffed.
In other words, I've got the contractor's got to charge me and I've got to pay it.
Yeah, there's no it's an existing residential block, so to speak.
This is just a house, actually. This is just a house.
That's just a house. I just
house.
Basically it's a renovation to a house. You're not creating any more. If you're building a flat in the garden, you might get away with it. Maybe you should try and do that.
I'll put a sink in there then.
That's right. I don't think the rules are quite that lenient, actually.
No, I'm sure they're not. Right. Okay.
But a good question. Yeah, I think you've got to pay the VAT.
So does that apply on a boiler or anything like that?
Yeah.
Does it? Right. Okay.
Mm.
Right. Okay. Oh dear, that's a bit of a shame, isn't it?
Sorry about that.
No worries, it's not your fault. Okay, all right. Thank you very much.
Thanks, Steve. Good question. Anybody else?
Oh, hello. I was the borehole question.
Ah, right. Hi.
And it is it's a client of mine. He's a building company. He's bought a residence to renovate and sell on. but it hasn't got a running water supply. So he's putting a borehole in for the water supply. Would that be 0 rated to him?
Hmm. It's a good question. So it's a, sorry, it's a house.
It's a house. So it's a residence. Yeah, it's already built. Yeah.
Right, so any VAT that's charged, you can't claim back.
Yeah, yeah, I appreciate that. But
So the question is there any supplies of water? Charges for the extraction of I think it could possibly be 0 rated. I don't know. Have you what sort of research have you done on this?
he's received quotations. One company has 0 rated the quotation, and a couple of standard rated. So
that's interesting. Mineral. For example, the opening and closing of stopcocks at the request of a water supply is 0 rated.
oh, okay.
Specific charges for the supply of water can be 0 rated. Supplies of water and ice. Because actual water itself is 0 rated.
Yeah. But this is creating the borehole.
This is creating, that's right. So I suppose releasing the stopcock is part of the supply of the water. So I don't know actually whether the actual construction of the borehole gets us into that, unless it's one of these, because I know there are special tax applications for like energy efficient stuff, aren't there? The energy efficient items get better tax relief than others. The answer is I don't know the answer, but it's a very interesting one, and I'm happy to. So who is this? Who's this speaking? Sorry,
It's Beverly Clayton.
Hi, Bev. Yeah, happy to check it out for you. Actually, that's an interesting one. I don't know the answer at the moment.
Okay. Yeah.
But obviously it's an interesting one because some people have charged about it and some people haven't. So
I know.
the
trouble is the person that's 0 rating the quotation is the most expensive quotation.
Right, and are they a larger business than the other people? Or?
Yeah, they're quite a large concern. Yeah.
So they should be more sophisticated.
You'd hope.
Yeah. Obviously, there's a bit of doubt about it. I'm thinking. Oh, I don't know. I'm thinking maybe not. But yeah. Well, thanks very much for your question. It's an interesting one.
Thank you.
We'll have to revert to you. We've got your details. So
yeah, brilliant.
Maybe Laura will give you a call back to discuss when we've concluded. Thanks, Bev. Appreciate that. Appreciate your question. Any other questions?
Hi, morning, Paul.
Is that Manaf?
It is, Paul, yes.
Hi, Manaf.
Hi, Paul, I just want to ask you, I've just got a client, obviously, who's looking at doing some new builds, renovations. Just want to look at, say, structure of the company for what purposes. So he buys the, say, land and, land to obviously build in one company, and then because he's got a team of people who do renovations, so it's him himself and with a few builders. So would it be for what purpose to be better to have a separate company to have the renovation works being carried out? For what purposes?
Yeah, I think that's good. Obviously every case is different, but if you think about what we've talked about today, there's sort of there's potentially for 3 companies in the group. Depends what you're doing, and if you're doing, is it residential we're doing here, or is it commercial? Or?
Yeah, he'll be doing residential homes and flats.
Yeah. So the fact, for instance, the 5% rate applies to renovations of existing residential properties, conversions into flats, or blah 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 blah. If he's doing that type of thing, but he's doing it himself, well, himself as in the businesses in general is doing it.
Yeah.
And what you need is you need a construction company over there to do the work for the company that holds the property.
Okay.
Because what happens then is that company that's doing the work can charge the 5% rate to the landlord that's holding the property if it's a qualifying 5% conversion.
Right.
You see, also gives cash flow advantages if it's a brand new, if it's building a brand new house, it'll give cash flow advantages doing it that way. So what you're going to need, you're going to need a construction company that allows you to charge the 5%.
Okay.
And you're going to need a landlord. Now, as we discussed today, sometimes if it's a house builder, if the landlord's, it depends what you've got. If you've got a landlord rather than the house builder, you might not need. What I said today was the house builder that builds a house, it's going to build it and sell it on. Sometimes that company might decide, actually, well, I've sold 10, but this one here is a bit of I can't get rid of this one. So what I've got is another company in my group to ship it onto, which is my landlord. So, you could have a house builder, you could have a construction company, you could have a landlord. You see what I mean?
Okay.
But yeah, it depends what they're doing really, and sometimes you might want your construction company outside of the group, because if the construction company is outside of the group, when the construction company's finished trading, you could potentially liquidate that construction company and get money out at 10%. Whereas if it's within a group, you can't liquidate it and get it out at 10% because of the factors to do with the group structure.
Okay.
So yeah, your question is very valid actually, and we didn't really talk about that type of stuff in the meeting because it's just it's just so much to talk about once you get into detail.
But there's too much. I mean.
Yeah, that's right. You can only do what you can do, but I think it's a really interesting subject you raise, and yeah, there's definitely you definitely make a difference with that type of planning for your client.
And just to add on to that, if they do just renovation, so that's the reason I think my question was that for them to possibly have a separate company. So because they may do new builds as a contract, but then also do renovation. So which means that the VAT implications can be different, isn't it?
Yeah, your renovations, if it's a house, you're renovating a house to buy and sell, then you can't get the VAT back no matter what you do, and you can't get a 5% rate. But that, you'll be doing different things. You'll be doing this project over here will have a different VAT treatment to this project over here. Whereas if you've got yourself set up with your construction company, your landlord, your house builder, you should be able to cope with all those situations.
All them things, right?
Yeah.
When you say landlord, do you mean company as well as a landlord, or?
I mean a corporate landlord. Yeah.
Corporate, right? Okay.
Sorry. Yeah. Sorry.
Yeah. That's great. Thanks, Paul.
Thanks, man. That's a good question. Anybody else before we finish? It's now almost 1:15. Okay, guys. Thanks very much for your time, and hopefully you enjoyed that. And Bev, good question. We'll be in touch. Okay. Thanks very much. Right. How do I get rid of this?